Hello everyone, this is Carbonomics. When you talk about investing, most of the time people are focused on calculations, business models, what's cheaper, and the list keeps going. A variety of factors related to individual companies, or maybe not even companies. It could be about options, forex, or other assets, what have you. The point being, what's often ignored is the temperament or personality traits necessary for the average investor to be successful, and in particular, the ability to hold a stock over the long term. Now, why is this so important? Well, because all the calculations, discounted cash flow models, and varying multiples are irrelevant if you don't give your investment ideas enough time to mature. A point that Peter Lynch would make often. If you don't know who Lynch is, he ran the Magellan Fund at Fidelity and had one of the best performing mutual funds in the world. He would say that his best returns came from stocks that he held for many years. Some of them were stagnant and hadn't done anything for 4, 5, 6 years before making incredible gains. A mistake we commonly make as investors is focusing on the noise the market regularly presents to us. What the media tends to focus on for clicks, recession, war, supply chain issues. There are a million reasons to sell stocks at any given time. But what has been the long-term trend of the stock market since its inception? In focusing on the long term, broader indexes have always had a positive return over a 10 to 20 year span. Falling into mob mentality, trend chasing, or the fear of missing out is what leads to the average investor's poor returns, returning about 2 to 4% a year. And this means that the average retail investor fails to beat the returns of the broader markets. Now, why is that? Well, it's because they allow their emotions to control them. They sell at the wrong times, they refuse to buy when the market's falling. They end up chasing hot sectors instead of predicting what will be trending in the future. The true art of investing, and the best way to invest for most people, is to sit down and do nothing to some extent. Do your own research ahead of time, find some of the best companies you can, buy in slowly and do nothing else. Dollar cost average into the company as it falls, unless there's a legitimate reason for the company's stock price to drop, like bad news. But all the time there will be broad market corrections that will impact certain companies unjustly, and that's an opportunity to go all in and make potentially life-changing returns. For an example of this, let's go back to 2019. The markets had recently gone through a decent correction in 2018, offering immediate deals on most companies in the public markets. Maxar Technologies was a space-related company offering satellite imagery, robotics at the time, and other services, mainly for government contracts. I used to own the stock at the time. It had growing debt obligations as they were expanding its satellite fleet, and it had just had a temporary failure of a portion of its satellite business. The company, having billions of dollars in assets, was essentially a turnaround play. Banking on the idea would be able to solve its debt issues, which would give them enough time to fix their fleet and avoid insolvency. Now, the new CEO, Dan Jablonski, was on a mission to turn the company around. Now, when I bought the stock in 2019, it was trading at around $9. The company started to make a variety of transactions to reduce its liabilities, selling real estate in Palo Alto, new bond offerings to offload near-term maturities, and divesting from the Canadian portion of the business, which was focused on robotics, ground services, and other things. Bankruptcy was out of the picture at that point, and the stock had shot up to $47 by 2021. And more recently, the company has been bought out for around $51 per share. Now, I didn't hold throughout this time. I sold for around $30 per share in 2020 to start buying commodities. But this is the power of knowing what you own. Essentially when you're buying as a stock drops unfairly, or you see a turnaround in the future. Now, are these life-changing returns? Well, unless you had a huge position, probably not. But there are other companies that could result in just that following a similar method. Particularly Avex Technologies, which is currently the largest position in my portfolio, and a good example of knowing what you own and doing nothing. And this is a stock I follow on the channel pretty regularly. The company is developing what it hopes to be the benchmark LNG futures contract, along with other futures contracts as well. Considering the value of the exchange technology and other assets on the balance sheet, like an iron property, shares in a spin-out company based carbon, and more, the value of these assets pretty thoroughly surpass the current market cap. So there's limited downside and a margin of safety, while the upside projections can be pretty overwhelming if things work out. Now, using the average price to sales ratio of its peer group, with just an LNG, carbon and gold futures contract, the company would have a projected worth of $33 in 2025, with the current stock price sitting at just under $2. This is undervalued just due to the assets on the balance sheet alone. But these are the types of deals that you can find and buy into if you're patient. Taking the time to conduct extensive due diligence and truly know what you're buying. But yeah, that is going to be the end of the video here. If you liked it, please remember to like, comment, and subscribe to the channel. And hit that notification bell to not miss future uploads. Thanks for watching.